and yen were higher, and that didn't last very long. So, and the gold fell apart, and I'm pissed because I had a 52.80 bid in to buy them all back in the gold. Didn't get them.
Oh,
Didn't
geez.
get them while I was under Dr. Hold on one second. Yes. You know what? I'll call you back. Yep. So I don't know. Board is interesting. Kind of surprised they really wanted to put the gold away, and I thought that came off of the article in the FT and other places that the Fed has not had to expend much money in all these various programs. And I said that'll get some gold selling, which it did. I think that article was highly responsible for not the break in the S&Ps, but well, we're going to we'll find out again. The bank stocks, which I'm not even long JP Morgan anymore, but long the only bank holding right now really is UBS, so it's not so bad. Hanging in there.
I love how they announced that minutes after the close yesterday.
Well, actually, Globex was still open.
Well, yeah.
I mean, everybody, but it was announced 3:30 Chicago time that it was coming. But there's some people who are very angry that they rolled back the Volcker rule, and Brainerd was involved in the discussion and pushed against the rollback of the Volcker rule. So I guess they had to give them a much more aggressive stance on stock buybacks, which people have to walk me through that because I'm not a big fan of stock buybacks anyway. And the dividends, are the dividends, but the banks, if they follow along with what's going on in the rest of the world, the banks are going to be underperforming and almost zombie-like. You want to see a zombie chart? Put up the Japanese banks. It's like pathetic. And I know because I've owned them for 15 years. We just collected dividends, but the stocks have gone nowhere.
So here, Peter likes. We kind of like this First Majestic pattern in the silver miners.
What's that symbol?
AG, First Majestic.
Okay. Even I know that's the chemical symbol. Yeah, I don't know. There's nothing
got potential.
as far as I'm concerned. I'd like to see it take out that high made in when was it? December of 19. But it's constructive.
Yeah, it's got to get above on the weekly. It's got to get above $9.50, and then it gets going.
Yeah. Like I said, I'm a fan. If I'm going to buy anything, as I keep saying, I'm buying miners, and I bought some Bungie this morning. Believe it or not, on any sizable correction. And we thought the CME is struggling because of the Fed. Well, look at here. What's the range for the 10 years for the week? Let's see. That's all we need to know, because we've had massive volatility in the S&Ps, and I'm not talking about the VIX, by the way.
And the 10-year just rallied to oscillator resistance again, and you had the 30-year filled its rollover gap. If it starts getting over, I think about 10 or 12, 179. I just want to see it. See, the active looks one way.
Jed, the range for the week is 24 ticks.
Yeah, it's a joke.
The range for the week. No, the Fed hasn't broken these markets. You know what? If I hear one more analyst tell me that, it's broken. It's broken. Yeah, what more do you need to see? You know what? Let's go back to the BOJ with the JGBs, the second largest sovereign debt market in the world, and you had to call and make an appointment in order to trade. Come on.
Yeah. And they've actually had a little bit more volatility lately.
Yeah, but look at, I'm on a JGB chart right now. But I'm laughing. I'm laughing.
Ira, the other day you mentioned on the big down day the other day in the S&Ps, you said the 10-year was only up 4 ticks.
Yeah,
I'm assuming what you meant is that under normal circumstances you would have expected the 10-year or bonds in general to be up a lot more. Is that really what you meant?
yes, that's what I meant. So, I mean,
Okay.
look at.
That's what I thought.
Let's go back to March, okay, when we were getting those huge volatility in the equity markets. Huge volatility, right? Here.
Yep.
You
Yeah,
don't have to
well, you
guess.
only had the one spike, the 187 and change in the bonds, and that was that night where I think that the NASDAQ was down so much.
Yeah, yeah, but look at the, here, let's put up a monthly, you could see the range. Let's see. So March, look at that range, right? Even February, look at that range. Look at the squashing of these ranges. May had a range of 35 ticks. I'm sorry, 45. So we had 45 ticks in May. Even in April, we had 70 ticks. And in June, we have basically 70 ticks. So, wow, it's, there's just nothing. And the volumes are decreasing dramatically. So, no volatility, you get decreased volume.
I mean, my simple brain, Ira, says that the lack of movement is the result of the potential overhang of all this additional issuance. Is that the way you see it?
Yep. Yeah. And the fear of the Fed. And if you had hedging to do, you're not going to hedge. And because, let's say we had a 4% more, mortgage that you refi. You don't have to hedge it. Are you worried about the Fed? You'd be wasting your money. You're not worried because the next thing we're going to hear from them is that it's yield curve control. So you go, oh, what am I going to, so why am I going to burn up that money? So people are just sitting here. And don't forget everything the Fed buys, and this has been a discussion Santelli and I have shared over the last 8-9 years. The Fed does not hedge its portfolio because they have a printing press. So when these bonds actually trade in the market, you'd have a lot more volume and a little more volatility, which the market needs some volatility if you don't want the markets to go to sleep and stop being efficient price discovery mechanism, because the Fed does not hedge its portfolio. So if the Fed has a, let's say, a 4 trillion bond portfolio, they're not hedging it.
Yeah. Ira, doesn't that cause a problem for the mortgage market because they can't hedge their book?
Well, there's enough out there because they know the Fed will not let the markets break down. So it's not a problem. It's not a problem.
Okay.
Really not a problem.
Yeah, I guess the mortgage market doesn't really have to worry about higher rates.
Well, all banks are charging, if your FICO scores, not everybody's getting mortgages at what they think they're getting them at, and not everybody's getting refined.
Oh, no. The mortgage market is tight as a baby's bottom.
I was listening to some of these home builders and real estate people. They lie more than gold miners do. As Mark Twain said, a gold mine is a hole in the ground with a liar on top. Real estate data and housing data is fueled by these salespeople who are just consummate bullshit artists.
Oh, wait, gold just hit high of the day. I didn't want to...
Yeah, I'm watching.
Yeah, it's putting in an ORH day.
Yep. And then copper was off to the races, but it's highly correlated with the S&Ps. But not as highly correlated as it's been because it's down 30 cents. But it is 4 cents off its highs.
Well, Ira, I'm glad you brought up correlation because the 30-day correlation, S&Ps to the dollar, the 30-day, is currently at -88. Yesterday it was -91. The 15-day S&Ps to the dollar is minus 50. Gold has a 15-day correlation to the dollar of plus 22 bips.
Yeah.
And on a 30-day, it's got a correlation of plus 11 bips.
Yeah.
So stocks down, gold kind of doesn't care.
No, only, you get some of those people, they think it's March and you're getting margin calls. You know what? Under COVID, there's no panel player at the whorehouse because the whorehouse is closed. I think the currencies are so important today. Again, when I look around and with all the political uncertainty in the U.S., and there's a lot of political uncertainty, I don't believe the polls. It's way too early, but there's a lot of political uncertainty anyway. Who's Biden going to pick? There's a lot of uncertainty, and I listen to these people tout, oh, the U.S. is a safe haven. The U.S. is not a safe haven. Well, why is the U.S. a safe haven? Why is it any more of a safe haven than any other member of the G7 or G8? Yes, I know it's a reserve currency, but the United States is not paying me to be in dollars. When Santelli was, when I was driving to the doctor this morning, so I listened to CNBC, and Santelli did a nice piece because he laid it out and how the differential between the Bund and 10-year has contracted so much over the last blah, blah, blah. So you're not even getting paid. Not even getting paid. And when I was, when I was buying euros this morning, I actually was buying the French and selling the Italian, and it actually worked because that's correlated out too, and I'm out of it because it's only I use one against the other, so I was able to extract some money. But even on a day where the equities are getting hammered pretty good, although the DAX is down some.
So
but the Italian is holding up pretty well as far as I'm concerned.
So Ira, I go back to something, circle back to something you just were talking about, safe haven in the U.S. So one of the hugest ways to make money on macro is to go against a assumption that everybody has, which actually isn't true anymore. It's about not to be true, and that's the one I got on the table right now, because we have economic. It seems like the U.S. keeps doing everything wrong lately. Everything wrong. We did COVID wrong, I think. We did our politics wrong. We're doing everything wrong. And the question of whether this is a safe haven or as good a safe haven is a very good question right now.
Well, Pete, I know that's you. Okay, and I think the point you make is really it's a great point at this time. I'll tell you why. Because if we go back and look, okay, let's look at the dollar index when we embarked upon QE. Okay, of course, the U.S. was really, outside of Japan's longstanding position, but the yen was holding very strong, which all these people who talk about the U.S. as Japan, I think the analysis they do is phenomenally flawed. Okay, but let's look bigger.
Dollar index is up.
Dollar index is up a little bit.
Yeah, I got the semi-annual up.
Okay, but let's go back to 07, 08, when the U.S. first embarked on QE.
Okay.
And you see, that in 2006, even 2007, we were at 83 and we went down and made a low in 08 at the time of Bear Stearns down at 70. And then the dollar rallies. But the dollar rallies at that time because as the great financial crisis unfolds, we find out that the rest of the world has several of the problems that the U.S. has. And Europe was entering a very existential crisis prior to Draghi's July 2012. So, yes, so you can make, as Pete is talking about, the cleanest shirt in the laundry basket, as, everybody needs a cute phrase. So it's, they like to run with that one. My sense is when does that, yes, I know that currencies are a relative value trade. That's all they are. Because this is good, this is bad. I'm hard pressed to find, I'm not going to, there's just very little right now positive to me in the US. The political season is upon us in a big way, and they're not paying me to be here. They are not paying me to be here. There's just not enough of a return. And and even Blackstone and Apollo and KKR and BlackRock, they're all searching Europe to look for equity valuations that they deem to be far superior to what they are here. And companies that have been zombie companies in Europe, but have good brand recognition and, you know, are quality companies. So that's where they're searching for. It's hard to find good values here in the U.S.
You know, how about foreign investors, though? I don't have any numbers, but I have a sense that for quite some time, like the activity of the Swiss National Bank in the U.S. equity market is a tell. But, you know, that foreign investors, you know, like institutions, rich individuals, probably are way overweight how much money they have out of the U.S. Out
of the U.S. or in the U.S.?
In the U.S. Overseas.
And how about the real estate market in New York? Did you read that?
Yeah. So overseas investors are overweight U.S. assets, probably, right?
Yeah, and you know what? Look at the tick releases. You know, the Treasury of foreign investors, you know, from all over the world. They've been terrible. But we know the Chinese have been selling some, the Russians have been selling some, but others are selling too. And it's a hard one to read. It's kind of like the Commitment of Traders report, because there's a lot of information there you have to find out. Like in the Caymans, the holdings cross so many different lines. You know, there's insurance. It's wherever people are hiding money. So, and those numbers are vast. So it's not an easy number to dissect and say, oh, I know what's going on. It's not. More complicated.
Take a look at this SPOO and Euro chart.
Oh yeah, you put that up. Let me expand that, John. Sorry.
It's SPOO denominated in Euro.
Is that the one you got up here now?
Yeah.
Yeah, I see you put that out before. Yeah.
Okay.
So Jeff, everyone, real estate in San Fran. What chart does?
I just took out the last low.
A chart of that? Or is he just making a comment?
He's just making a comment.
And what's the real estate market doing in San Francisco?
I think that's tanking too, because all of the Chinese.
Oh, yeah. But let me tell you this. I'm here in Arizona, and I'm an old person, meaning I'm 67. I know, Judge, you're 68, I think. So the influx where I live, and I played golf with the guy, in fact, I saw him yesterday. He's in his 30s working for Apple, and he's got a 6-month-old. This is unheard of where I live, but they're starting to move in from California. I mean, the influx of people from California to Arizona to Phoenix area, especially as the high-tech area grows in Chandler.
Fleeing communism.
It's amazing. So I go, so who's still left in California paying those exorbitant prices? So I got it.
Well, my son's a political strategist in California, and he said that overwhelmingly Silicon Valley is economically carrying that state. I mean,
oh yeah, I've seen those, you know, tax numbers, and we really haven't gotten into, you know what, and that's going to be the next big role of the Fed, of course, is pumping money into the municipal bond market. And it's going to be enormous, because as you know, as we've talked about many times, you know, why is again, we talked about it yesterday, why is the Treasury's balance sheet so big? The revenue shortfall is going to be so enormous. They're all going to need money. And that's what you know, like the article in the FT today talked about, that the Fed is way underspent for what they committed to. That's true.
They haven't put all the money to work yet.
Yeah, right. Not close, but they know what's coming.
So everything you guys just said, Ira, takes us further down the path of yield curve control.
Yes,
Or rather, I should say closer to it.
or negative interest rates. What's going to come first?
Yeah.
Well, I mean, I think ultimately you end up with both, because you can't have one. Well, let me just say, you can't have one without the other in that circumstance, right? Yield curve control, money printing, higher inflation. You're going to get negative real yields, of course.
Yep, loving marriage. Can't have one without the other. But they think that you can, but we'll see. But which route? They so do not want to go to negative rates, although there's enough academic support now that they can hide behind it. They'll build an edifice of deceit, as I would call it, through academic work. Because again, it's all theory. And as Bookvar, who's just one of the more clear-thinking people out there, talks about, look, you've got one example after another where it's decimated your banking system, right?
Yeah, and they're going to go do it.
And they're going to go do it. And they're going to go do it.
I was wondering if did you ask Manuli about that that survey at the end of Mester's speech?
No, I didn't. You know what, Judd? I didn't watch her speech. I had read hers from the day before, and they said it wasn't going to be that different. So I said,
yeah. Well, at the end of it, there was a survey.
Yeah.
About where you thought rates were going to go, and I said they were going negative. So
Yeah.
I would be just interested to find out what everybody that listened to that through that whole channel, distribution channel, thought.
Well, when you come in, he says he comes in, and
I'll have to
listens.
ask him in the morning. He's usually in the morning.
Yeah, because he likes, he doesn't get, most people don't get a trader's viewpoint. And that's the problem. I had a long conversation with Ricky Santelli yesterday.
Judd, do you remember?
Reedman's mom passed away.
Oh, yeah?
Yeah, COVID.
Judd, do you remember how to pull up that yield curve chart that Stan showed you the other day?
Oh, I have to call Stan. I
have no
but I
idea.
have to be focused to talk to Stan. He owes me a big tutorial.
Yeah, you got to have Stan call you when you're ready to focus, because
Right. I just
so much going on in his head.
Yeah, after I get back to Chicago, hopefully Tuesday, I can get out of here. As I was with my doctor this morning, he's just great. He's the guy who did that 100-hour and 20-minute interview with Sidney Rittenberg, because he was his patient who died last August. But we were talking about it, and he's the guy's such a great. You got to approach this with a scientific eye, and remember, what is scaring people is, remember, the heat was going to kill this off, because that's what we know about viruses. They run wild up until probably late April, May, when the warmer weather starts to hit, right? Flu, cold season, we know from living in Chicago, right? We know what that season is all about. Well, this is now getting worse, and it's 110 here in Arizona. And for all the people who said, the heat will, and that's why the southern states got more aggressive. Well, that ain't working.
But they also they came from a much, much lower bottom than we were in the Northeast.
Well, that's true, but there was an aggressiveness because, the theory was that the heat would help mitigate the numbers, right?
Yeah.
But we didn't, and I said to him, but we didn't see that out of Singapore. Because Singapore was going to be the good test case, because it's always 85 in Singapore. But then Singapore had a second round where, but we didn't know what the truth was about it. So again, there's so many things, how many of these are still coming out of senior residences?
Well, that kind of already killed everybody.
No, there's a lot more of them out there. And of course, the Tea Party crowd was thinking that was going to help the budget going forward. And I don't,
There's always plenty of aged people being created every day.
well, maybe. Except they found a way to cap it, I guess. And I can make that joke because I'm in that crowd. And then again, you don't know what the vulnerability was. So you really don't have a sense of what the mortality is, and you really don't have a good number for the denominator. And there's a lot of people that they find in the field who they'll list things as COVID, and it may not be COVID, and it's not COVID that killed them.
There's a local nursing home that the state said had 50 cases and 6 fatalities or 14 fatalities. And they're adamant that it's not true, that they had no cases. And they're arguing in the paper. So we didn't have any cases. And I got to believe what they're saying is true, because why would they, shine the spotlight on themselves as liars,
Well, except, they're probably trying to get out in front of the lawyer. There's all kinds of things going on. And they have reputation risk too. So, how far will they go to defend it? Which I don't blame them. Hell, you spend your life building a brand and reputation, and then it comes and gets destroyed like that. You got to stand and fight.
Yeah.
Fuck, I went toe to toe with the government 3 times over my name. I was not accepting what they were offering because they were just looking for scalps. I said, no, let's go. And 3 times they just walked away from it. They told my lawyer 3 times, we don't want any part of it. Because you know what? I wasn't going to allow my name to be bandied about and sullied based on what, on their scalp, on their desire to get scalps. So I understand that.
Yeah, well, that's their job, is to screw people. That's how they get ahead, and all you can do is fight them.
Listen, the worst whores in the world are district attorney, state's attorney, attorney generals on the make for a political job. That's just and I've always maintained that if I was involved, I would work to pass a law that said that any state's attorney who played with the evidence and if found to have done that would serve the convicted person's time. I've always felt for a lot of Black Hispanics, when they want scalps and they go and they play with evidence, these people get convicted. How many of them are out there? I love that Northwestern University project where they go, where people do a lot of pro bono work to go look at cases of people who were convicted by questionable evidence. And really, I think that anybody who can be shown knew that the evidence should serve the person's term.
And be disbarred.
Well, that goes without saying, but
Yeah.
should certainly serve out their term. I mean it.
Oh, okay, so you got Facebook doing the ORL. Google's putting a weekly ORL in right now. There's major topping patterns in all these big cap stocks, you guys.
Well, that's because Unilever announced that they're suspending all advertising on Twitter, Facebook, and I think Google because of the political polarization.
I don't blame them.
Hey, you know what? What's taking them so long?
Yeah.
How about that? That's what I would say. What's taking you so freaking long?
Yeah.
Listen, and I will die to defend free speech, but I'm a big believer in the work of Shoshana Zuboff on the age of surveillance capitalism. It's such a great book. She's detailed this out, outlined this out. You know what? I'm sorry. There's too much crap that goes on, and they know way too much about everybody's lives. Listen, it doesn't matter where I go. I read the South China Morning Post, and I'm getting advertisements. Now, I just bought your goddamn product. Don't keep advertising. I will not buy. 4 eyes, which is the glasses I wear because they last a long time, and I need 275 readers, and they're a little stylish. I will not buy their product ever again. Why? Because they have they bombard me all over the place. Wherever I go to, I don't want you to be bombarded. I won't buy a Dick's anymore. And now I wear Brooks running shoes, and I love them. So now I go right to the factory. Because I don't want those pop-up ads bothering me all the time. I just bought your product. I think your work is garbage because you would know that I'm not in the market to buy again. How many glasses do you think I need? How many running shoes do you think I need? You know, stop it. And that's because, and it would show up at places where I'm not even expecting it, but that's how the data crunching crosses over. And I know, I'm not a Luddite. I understand the world I live in, and I understand the trade-offs. Listen, I watched free television, network television, free, and the price was to get advertisements, right?
Yeah.
That was the bargain.
You had to watch the ads. Now nobody wants to watch the ads. They got TiVo. They fast
Right.
forward.
So
I
they
don't watch
find you
any
anyway.
ads. Or I won't watch it.
Yeah, my
Or
wife
you
will
just,
not.
or you just get up and go get more potato chips and take a pee.
I've started binge watching. I've had my share of binge watching. I'll tell you what, Hell on Wheels. Anybody watch that? About the building of the Transcontinental Railroad. It's 5 seasons. So I did that. I did that. Now I'm watching The Ranch. Anybody watch that?
No.
Grant.
Yeah, it's actually pretty good. It was put together by Kutcher.
Kutcher, yeah.
Oh, yeah.
Is that the one with Ashton Ira, that's Ashton Kutcher, right?
I watched a little of that.
Yeah.
I couldn't get into it.
I like that show.
You know what? Sam Elliott is great. Deborah Winger is great. And it's a make work program for all the people who were on the 70s show.
Yeah.
Yeah, and the other one that was pretty good was Longmire that had Lou Diamond Phillips in it.
Longmire was
Oh,
awesome.
that one I don't know. Now here we are. This is interesting, and I don't know where this is going to go, but the currencies have turned around and rallied here, even with the weakness in the S&Ps. So this is kind of what I want to see. Let's see what happens here.
Yeah. I started watching I started reading that Shanghai book, Ira.
That must be fascinating. I just
mean,
can't.
what these guys did and the hotels they created,
Yep.
and the empires were unbelievable.
Yeah.
And the family, how they
Yeah.
break off and different members and how the Keswicks just hated them.
Yep. Oh yeah. It's phenomenal. Really, listen, it's great to read that history because it gives you a sense of where you are. Again, context. It's all about the context of where we are. Oh, and this time it's different. You know what? I always believe they mimic, or as Mark said, first history appears as comedy, and the second is farce or tragedy. But it's just true. So if you don't know that, if I could get people, if I was teaching a class on how to really trade with a perspective, I would have everybody read the 3 volumes of Fernand Braudel on the economic history of the Mediterranean region in the 15th, 16th, and 17th, early 17th century. Because you'd be amazed. You'd be amazed at how much you'd learn about the present.
Yeah.
That's why I'm so boring, but hey, what can I do?
Well, you just got the ORL daily stops in the S&Ps, so this stuff gets going after 2 o'clock. It'll break another 40 handles. There won't be any.
Yeah, I have some orders in for a 40 handle rally beforehand, hoping I'm going to get it because I'm out of my shorts. But we shall see.
Yeah, it's the thinnest part of the day. You have no idea, and it's all algos right now anyways.
Right, but this is interesting that it's New York who's selling the dollar here.
Yeah.
You know what I mean? First it was Europe. Europe was dollar sellers because, you know, we had the euro up at, you know, what do we make the, probably at about 4:30 in the morning, about 6:30 Chicago time, maybe 6 o'clock. The euro made its high, the yen made it. They were going together. So we were seeing a repeat of that. And then we know what happened. Let me see these.
I mean,
See?
the only stock that looks halfway decent right now is Mercado Libre.
Now listen, with as weak as the euro got, with the weakness in the equity markets, the BTPs are holding in there pretty well. They're still higher on the day. They've had a pretty good week, if I'm not mistaken. Let me take that.
Hold on. Yeah, they're still up a few ticks.
I mean, considering what's everything around them, they're worth paying attention to. So they're, let's see, they closed last Friday at 142.58. We're trading 143.35, and I'm talking about the futures.
Right. I got
Bullions are probably a little lower on the weekend.
no.
Could be wrong. No, I'm wrong. They closed last Friday at 175.60.
Yeah.
They're all up about the same, which is highly unusual. Highly unusual. And what's the euro for the week? Let's see, the French is up how much?
The euro's up 46 ticks on the week.
Okay, very important. So, and there we have, and even the French is the weakest of them all on a tick basis on the week. So, interesting. This is really an interesting week. You know, let's see the way it closes out. And that's all I got. So I'll be out of touch until probably Wednesday. So
Okay.
enjoy.
Are you flying or are you driving?
Driving. I got the dogs, and my wife. She doesn't want to fly because then we're heading to New York eventually. You know.
Oh. Are you going straight up or are you going across?
No. I'm coming from Arizona. My daughter headed to New York. Quarantine. I'll be home in Chicago probably for 4 or 5 weeks, just to make sure.
Ira, how long is that drive from, Scottsdale to Chicago?
Oh, sure, 27 hours.
27?
Yep.
Ouch.
Yeah.
You know what? It's a good time to see the country. I love to drive. This time we're going through. I'm going up through Pueblo, Colorado Springs, then Nebraska, Iowa. So it's really a good way to pay attention to what's going on in the country. I can see how much trucking is on the road. You really see a lot. You know what? And I like it at this time because I'll see bumper stickers. So I did a long drive in 2016, and I knew Trump was going to do better because I was in Ohio. That was a New York drive. And I saw, even in October, I was on the road and I saw a lot of Trump stickers. I'm going, what? But it wakes you up because you see Trump signs, especially in rural areas. They have big signs around the barns, these guys put it up on their land. You see stuff, So I kind of like it. I'm a road warrior. I like to be on the road.
No, Ira, you're right with that because I drove from New York to South Carolina, upstate South Carolina, and I went down I-81 for most of it. And a lot of Trump stickers, and to tell you the truth, a heck of a lot of truckers.
Oh, God.
I was kind of surprised. I was thinking, there wouldn't be. It almost seemed like there was, as many truckers as there were cars.
Yeah.
Todd's in Southern California. He said it's just packed.
The train station to New York City, which is 5 minutes to Grand Central, it's the same 1 or 2 dozen cars that have been there for the last 4 months. But the traffic on 684, which basically goes from like my house down to White Plains, that's picking up. But people commuting into the city, not happening. It's a ghost town.
Ira, I went into the Loop yesterday.
Yeah.
You could go down there and fight the bums. They were all picking up cigarette butts. Those are the only people downtown.
That's what I heard. That's what I heard. You know what? I'm going to go downtown because I got to go see my lads. So yes, but that's why I heard Michigan Avenue looks like a war zone.
Oh, it's awful. It's
That's what I heard.
awful.
You know, I don't read the papers. You know, really, I don't watch. I don't watch network news. I don't even have CNBC. I had it on yesterday because I was trying to see about the Albertsons IPO, which actually priced today. But outside of that, I can't listen to it because.
Look, I went to the University of Chicago this morning. There was nobody in the hospital.
Really?
Oh, yeah, because they have everybody social distance for appointments.
Yeah.
And they only have people coming in every other day to see certain doctors. There's nobody in there when you walk in. There might be a couple of people, and everybody's 6 to 10 feet away.
Well, Judd, that's an issue. Is that a lot of people, and my brother warned me of this months ago, that there are a lot of people who need care. It's like I went for a physical today, and I talked about it with my doctor, and the guy is really a great internist. There are people who are not getting. They're just not taking themselves to the doctor because they're more afraid of getting COVID and they're going to die from something else. And these numbers are significant.
Yeah.
Significant. Not
The
to be,
doctors don't want to see it.
well, yeah, they tell people to stay away, to a certain extent.
I was supposed to have a colonoscopy. The guy said, forget it.
Yeah, I know. And that's what I'm talking about. So there are a lot of people who are going to be very badly harmed because they
these healthcare CEOs, Ira, they're basically deferring capex big time in healthcare.
You know what? And that's an issue. We're not just healthcare capex. I'm thinking that the jobs number is going to not come back quickly at all, because I maintained when everybody was celebrating the 3.5% unemployment levels, and I would dig through them and analyze them in my comfort zone, my discomfort zone, I should say. And I'm going, you know what? Firms are taking on more people because they're not really convinced the economy is that good, and it's easier to lay off people than to absorb a $10 million capital expenditure, a $50 million new factory. So they take on more people and run more shifts. And that's what I think was going on. When now the effects of this pandemic is going to force, to me, a heavy increase in capital expenditure, and the employment numbers are going to lag badly because of that.
Ira, you mentioned Albertsons. I've been watching that, myself. It's just about back to its IPO opening range now.
Yeah, I know. I've been in that for a long time because the guy, I don't like the private equity guys, but that's not a choice I can make. But the guy, one of the guys who I know well, in fact, him and I sit and talk global macro all the time. So he put me in the deal. I paid to be in the deal probably 6 or 7 years ago. And this is the third attempt to bring it public. And it's actually been the best indicator because they were supposed to come public in March. The market fell out of bed. They were supposed to come public in September of 2015. I was on my way to a brunch for the launch. The market was weak. They pulled it back. I said, this is the best indicator. Whenever you tell me that it's coming, I should just get short the market. And you know what? It hasn't been bad again.
So here it is, today's IPO, huh?
Yep.
Opening is 15.5.
Yep.
Yeah.
Well, there you go.
Yep.
With the stop
And the three trucking companies that I saw the most, Ira, see if you noticed the same.
Well, wait,
out there
let me tell you. Let's compare notes. It's
Werner,
I wouldn't have
Knight,
said that, so that's interesting.
Werner, Knight, Swisher, and JB Hunt.
JB Hunt, I would say for sure. And then that one
KNX. They do Knight Trucking and Swisher.
Yeah, see, I would have said JB Hunt, and then that one that looks like a British firm, because I'm driving out west, so I'm going to see a difference.
England.
Yes, England. That's right. That's right. And then there's one other that I see a lot of.
Well, there's the one out of Green Bay.
A shitload of Walmart trucks on the road. Shit.
Yeah. And you do see some Amazon Prime.
Yeah, that I haven't noticed on the cross country stuff. Locally, yes. And, you know
But
what?
not nearly as many as Werner, Knight, and JB Hunt.
Yeah, JB
You
Hunt.
see some Old Dominion. You see some Old Dominion, but those three you see a lot of.
Well, and when you're on the road west, you see Prime out of Springfield, Missouri. They're big. They're big.
You know, and a few Landstar, not many.
And you know what? See, when it starts to get to dusk, I like to get on their asses because I figure whatever animals are crossing, they're going to hit, and I just ride their tail. Hey, I'm an experienced cross-country driver. I know I was driving through Wyoming once, going from Jackson Hole up to Rock Springs. I'm driving through fucking Wyoming. I saw more fly fishermen than I saw cars, that was for sure, along the whole way. And I went through Pinedale, which was the natural gas hub for a lot of drilling companies. It was the only place I got cell service was in Pinedale. They had a population of 4,200. But I drove that road all the way to 70. Right on the tail of a trucker. He was going 80 and I was going 78.
Yeah, those truckers up there don't fool around. They're usually
Oh.
going 90.
You know what? That's money.
Yeah. Well, you like going across Iowa because you like the smell of money, all that cow manure and the.
Oh God. Oh God. Especially this time of year. Yeah, but I could have been going through Amarillo.
Yeah. Well, Rob would have treated you to steak.
Yeah, but
Yeah, I was going to say, call us from Amarillo when you're chomping on a 64-ounce T-bone.
72, it'd be Homer Simpson. All right. So there's a lot of time, there's a lot of action left in the time of this day, I think. So let's see.
All right.
I'd love to see a spoo rally here of consequence.
Ira, I got a quick question if you don't mind.
Nope. Oh, that sounds like Bosco to me.
Yeah. What if we go to negative interest rates, how would that affect the debt between China and the US? Like what would happen to the currencies in that?
I don't know.
Who would benefit?
I don't know. It's a good question, and I don't know. Again, if you go to negative interest rates, you know, you're really at negative interest rates now, because I always judge them not nominal, but in real yield terms. So you've been there. The United States is negative now. You know, I'd almost argue that interest rates are lower in the U.S. in real terms than they are in Europe. Because
Ira, my follow-up to that, do we need to distinguish between negative interest rates and negative real yields?
Well, all depends how far you want to drill down. A lot of people say, no, I just care what the nominal rate is. So for at 0 to 25, the nominal rate, let's say, is 12 basis points. Europe is at 0, but it's at negative 50 on its deposit rates. So when you get a mix, but if I take the 10-year, as I've argued, that if I build a basket out, because I think the euro is going to make it, so I'm willing to put together a basket of sovereign, you know, I could probably match the U.S. 10-year, maybe get a little bit more in Europe on a pro rata basket. And I think that I think that inflation rates in Europe are genuinely lower than in the US. So is the real rate of return on money in Europe higher than it is in the United States? In
So
Japan, you have zero inflation, maybe some deflation. You're still getting zero on it. If you're a Japanese investor, zero on a JGB. So yields in Japan are actually higher than in the US, not nominally, but real. So, again, it's what makes currency trading, to me, it's why I love it so much, but it's why it makes it so difficult. So Bosco, I can't give you a definitive answer. We don't know.
I'm just wondering, the U.S. can't raise interest rates because the fear of servicing that debt. So if you go to negative interest rates, then other people are going to service the debt.
Right? Pretty nice.
That reflects a high degree of confidence in the U.S. system because other
Yes.
your money there.
Yes. But if you have that degree of confidence, so tell me why gold's at 1782 and a half. There's some signals out here that are so in conflict that you really have to think through it. These answers are not easy answers. And they're not binary in any way, shape, or form. They're most multifaceted. But if everything you just said, Vasco, then why is gold up at these levels? Especially with the equity markets where they're at, right?
It just doesn't make sense.
It doesn't. It doesn't. And I don't know whether you listened to the FRA podcast I did with John Malden.
I listened to it.
Yeah.
Yeah.
Yeah, we'll listen to it.
Yeah, but he's one of those guys, he looks at gold really in a binary fashion, but I don't think it can be binary at all. And you and I agree on that, Oscar. We would rather have $40 gold, as he would. As he said, he wishes he could give the gold coins he has to his grandchildren to play with. It's a very noble, and I would love that too, but it's not the world in which we live in.
So between China and the U.S., someone's holding someone hostage, basically, economically speaking.
I would say that the United States has held the world hostage, but the world has held the U.S. hostage, with the whole concept of the reserve currency.
When's the last time China's economy was open?
Well, it's not, and it won't be. It takes a long time. But the United States economy wasn't open for 150 years. Really. Hell, you fought a civil war to resolve some of that issue too. They're not easy. These are complicated issues. Not easily resolved. This is not a soundbite resolution. Wars have been fought over these issues. Because I would argue that, well, the slave trade was as important to the Southern economy as were the tariffs issue. So one kept feeding the other, and they were so intertwined. Not easily resolvable. Not easily resolvable. And then when money started really flowing around the world, who do you think financed the railroads? The Brits did as much through, the British, through London, which was the financial hub of the world, to finance the building of U.S. railroads. And other railroads. The Brits were the dominant capital involved in building the global railroads. So, very complicated issues. Not so easy to, not quite that at all. But tell me why we're getting a dollar breaking. I mean, the euro's trying
Euro's
to.
taking off. Yeah. It's going up with it, like you said, it's going up with the S&Ps now.
Yeah, I mean, we have something, and again, I listen to people, I'm just, I've been very consistent of the last 5 weeks, 6 weeks that I thought it was a sea change. This dollar issue is really perplexing to me because, again, I step back and I've traded currencies long enough. I just, when I take out my measures and do my analysis, my matrix, Judd, I see very little reason to want to be in the dollar. And that's not necessarily a bad thing. And it's not an issue of trade. It's a much deeper and bigger issue than that. But let's see, the emerging market currencies got hurt today. The Mexicans cut interest rates. Do you know that? 5th time this year, they're down to 5%. Peso holds up pretty well. Not, right? The ruble is what the ruble is.
Break anywhere that you want to do anything with it.
No, they're just, but they just don't need, the Fed will never say it, but the last thing they need is a strong dollar right now. And yet, I know I stand alone except for Roach wrote that great piece. So we'll see. We'll see.
All right. Well, have a safe drive home.
Okay. All right. Thanks for your time. Any other questions pop up, just send me a note.
Okay.
All right.
Yeah. Thanks.
See ya.
What has Rob got on the Hogs? The Hogs are getting whacked today.
Thank you.
I don't know. I don't think he's in.
Okay.
No, he's been taking it easy. He's been racing the geriatrics on the treadmill, trying to get his heart back into shape.
That's okay. That's good.
Ira, I spoke to him last night. He said in the absence of any kind of virus slaughterhouse issues, he said buy the live cattle over the next 2 weeks and then hold it through Thanksgiving.
Okay.
Yeah, and there was also a good article too in Bloomberg this morning on slaughterhouses.
Oh yeah, I read that. I did read that piece.
Yeah, about how much it cost to and how much they had to lose before they were profitable to create a small slaughterhouse.
Germany has a big slaughterhouse issue too. Okay.
All right.
Take care, guys. Have a good weekend.
Yeah. Thank you.
Bye.
Thanks.